Good morning, everybody. I'm very happy to be here. The BVI, my name is Thomas Richter. I'm the Chief Executive of the BVI. The BVI is the trade body of the German investment fund and asset management industry. We have 115 members, all the firms you know, from BlackRock to DWS, from Deka to Flossbach von Storch. This is the market we are representing. And I have the honor to give you an insight into the buy side. So I've been asked to explain what is the buy side, or better, who is actually the buy side. It's basically three groups of investors. The first one, the biggest one, by the way, are asset managers, investment funds. So these are the companies represented by the BVI. Then you've got institutional investors in general. The institutional investors are pension funds, in German Pensionskassen, Versorgungswerke, and the likes. And finally, hedge funds. So these are the three key groups of investors. Insurance companies belong, by the way, to the group of institutional investors. So the fund industry, and that's the piece I'm going to talk about, the fund industry worldwide almost quadrupled the assets they are managing. So we come from roughly 16 trillion in 2008, and the industry today is managing 6,200 billion euro. This is a fantastic growth rate. You may wonder, why is that? Why did the industry grow so heavily? And you will see that growth started in particular with lower interest rates. So the lower the interest rate got, the more people invested in asset management products, in particular funds. So if you want, the banking industry was quite suffering from the low interest rate. The insurance industry was really suffering from the low interest rates, but we are actually benefiting from it because there is a demand for more balanced products, for more equity, less bonds, less fixed income. And this is the reason why we had such a success over the past 10 years. Let's come to a more German perspective, and that might come as a surprise for many of you. The German fund market is actually the second largest in the world. Of course, number one by far are the US. The US market share on a global scale is 50%, which means that half of the fund industry, in terms of assets under management, half of the market is the American one. So the domestic American market. So number two is Germany. This is due to the fact that we have this very important institutional business. I'm going to talk about it a little bit later. Followed by the France, UK, Italy, China, just growing, still an emerging market in our arena. If you put the figures in a comparison with other industries, you can see that on the left side, the 3,800 billion, this is managed by asset managers here in Germany. So that's the size of the German market. This compares to the hedge fund industry globally, that is even smaller than the asset management business in Germany. So the global hedge fund industry is smaller than the fund industry in Germany alone. Retail funds, increasing importance of equity funds and balanced funds. So one of the myths about German retail investors is they don't like equity. German investors, retail investors, prefer fixed income products and bonds. This is not what my family and what my friends tell me. If I'm talking about online and I don't know what, they have no clue. So indirectly, they might be owners of bonds via life insurance contracts. Okay, that's for sure. it's pretty safe to say that direct investments in any kind of bonds, this is definitely not what German retail investors prefer. What they do is actually buying equities. You see that even equity funds, that's the green piece, that equity funds were growing from 32% to 42% in 2022. This is an interesting observation. Balanced funds is at least 50% equity as well. So the total equity piece in this one is more than 52%, so probably 55%. So that is, there's a lot of taste for equity. And of course, there is a lot of taste for real estate. In orange, the 10%, these are open-ended real estate funds. So there is a growing demand, a very stable demand for property funds in Germany. I forgot to talk about one important observation, and this is on the right side at the top, 23% ETFs. So what you see here, the euro, the 1,280 billion. This is the money managed in retail funds, retail money. No insurance money, no pension fund money, no corporate money, just retail. Almost 1/4 out of these 1 billion, 1.28 trillion is ETFs. So the ETF business is ever growing. Growth rates are significant. Germany is the biggest ETF market in Europe, the second biggest in the world, of course, after the United States. And it's ever growing. We would be happy to display a little bit more, to give you more insights into the ETF business, but that would require the cooperation of Clearstream, and this is a field we still have to work on to convince them to help us increase the transparency for the German ETF business. Sustainability. You know, this is an important topic for our industry. For 5 years now, the legislators across Europe and the world have the strategy to use the capital market to redirect capital from brown companies to green companies. There could have been another option. The normal option for a politician is to say, well, this industry has to follow these criteria and that industry has to follow these criteria in terms of carbon and whatsoever. But that's not the way they are choosing. The way they choose is to set up a legal framework how to invest according to sustainability criteria. And then the hope is that the financial industry will be redirecting the capital away from brown and into green. So it's a long process, it's very complicated, it's overregulated, it's a very difficult subject these days. But there are first signals of success. And what you can see here on this slide is definitely a success. Again, I'd like to refer to the 1,280 billion euro in retail funds. And half of it is invested in funds with sustainability features. This is a tremendous success, as that is a development for maybe 4 years, 3 years. So, and within this relatively short period of time, the market share of sustainability funds grew up to 50% of the total market. The key driver of our industry is pensions worldwide. This is not just the case in Germany or in France or in Italy. This is the case in the United States, and even in growing markets like China, old age provisioning is the key driver of our industry. So, and that is an important issue while we are talking about the buy side. So the buy side is also represented and you can see it on this slide in green and in particular in blue, by institutional investors such as insurance companies and pension funds. So these are our key clients. If you wonder, I was talking a lot about retail clients and forecast, but our biggest clients are actually insurance companies and pension funds. And they stand for roughly almost 70% of the entire assets that our industry is managing. So the main topics these days, of course, old age provisioning. That's the second bullet point on this slide. That old age provisioning is in every country a very national thing. So 80% of the rules that we have to abide by come from Brussels, EU legislation. The sustainability legislation, MiFID, and all these directives, it's all European. The remaining 20% has to do with taxes. Taxes is not harmonized on an EU level. So taxes remain in responsibility of the member states of the EU. And every pension scheme is, of course, is related to taxes, because one wants to incentivize investors in the long run, long-term investments, etc. So there is always this relationship between taxes and old age provisioning. And there is this project in Germany going on right now, the new government, which isn't as new anymore, by the way. The government is thinking about a replacement of Richter, the Richter reform. They are unhappy with the success of Richter, and they think about how to substitute it by another product. And of course, we made our pitch for a savings plan with investment funds. We will see the outcome. It's probably the hottest issue of our industry right now, at least in Germany. Sustainability will remain on top of the political agenda, as I mentioned before. It's very complicated. It's somehow stuck in the underwoods of regulation. It became too granular, and at the same time, there is too much unclarities. We even do not have a definition of what is a sustainable fund. There does not exist any such definition. Another important issue are costs of market data. I know that I'm standing here in front of the sell side, but market data is an issue. We need market data from exchanges. We need market data from rating agencies. We read the data from index providers and so on. So our problem is we are facing oligopolies that are raising their prices on a double-digit basis yearly, and that is, of course, an issue for the buy-side industry. It's probably one issue that the buy side is holding together on a global scale. So globally, that is a key concern. And finally, we are siding with Deutsche Börse in Europe on the euro clearing issue. So unlike many other asset management associations, we are supporting a repatriation of the euro clearing away from London to Frankfurt. And I guess we are very vocal and try really to get it back to Frankfurt. Thank you very much for your attention.